All right, good morning, good afternoon, everyone. Let's go ahead and get started with this week's broad market analysis. And as always, this is live. I won't be interacting if anybody has questions or anything like that. This will be really straightforward. This is what I do every single week. We'll be highlighting what's coming up for earnings, looking at the market watch, looking at last week's results from the neutral strategy, looking at new levels for this week's neutral strategy, looking at the ES, the NASDAQ futures, the dollar, the TNX or the 10-year treasury, and a couple other things. And at the end of this video, this week specifically, I'll be going over what I plan to do for this week covering SPX options. So again, we ended the week really nicely with a 780% gain in the SPX. And I want to show you what I'm doing just in case some of the folks are, obviously working, you're taking care of business, and you don't have time to look at the charts all the time. I want to give you some insight during this video of what I plan to do this week. And so because of that, I want to get you geared and ready so that you're ready with me, okay? So let's go ahead and start. Again, not looking for any holidays this week. It's a full week of trading. We do have some anticipated earnings this week that I'm finding interested, and I went ahead and underlined them. So I'm interested in Best Buy, CrowdStrike, Salesforce, Okta, Chewy. I actually started a long-term position in Chewy, and if we get a pullback, I'll be adding into that position. Viva, Five Below, and then on Thursday, Dollar General. I'm not into any of these other names. And then over here in the afternoon, though, Broadcom, sorry, Lululemon, Mongo, and then looking at VMware. And then on Friday, not much to talk about there as well. Okay, so we still have some good names coming up, guys. Still have some volatility coming into the market. Still looking for some awesome moves. So definitely looking forward to CrowdStrike. Moving on over here into Market Watch. If you all remember supply and demand, trendy edges, identify those supply and demand zones, and basically why I look at the market watch is so that you understand that volatility could be coming into the market during some of these econ data moments. But remember, we find the zones and the levels before this stuff comes out, and this is just news, and it pushes price into those levels, and then I teach you how to trade those levels. So really, it's just about process, patience, and then profits. Okay. So coming up on the 28th tomorrow, we have nothing scheduled. Typically, these are interesting days. If we don't have any econ data, it's kind of like wow, wow, west. We'll see what happens on Monday. Tuesday, we have S&P Case-Shiller Home Price Index, job openings, consumer confidence. Consumer confidence coming in and the job openings right after the market opens. So this is Eastern time. I am on Central time. And by the way, guys, I'm here in Florida and just found out this morning that we could have a hurricane headed our way. So this is going to be a really interesting week for myself because we just started our landscaping project and we have nothing but dirt in the backyard. And with all this rain expected, this is going to be get really crazy. So keeping my fingers crossed and hoping that this doesn't turn into something a lot bigger than a category one, but we'll see what happens. Wednesday, ADP employment before the market opens, GDP revision, advanced U.S. trade, balancing goods, advanced retail inventories, advanced wholesale inventories, pending home sales. And then we get into Thursday and Friday. It looks pretty busy. Again, initial jobless claims right before the open, personal income, PCE index, core PCE, Chicago Business Barometer, and then on Friday, U.S. non-farm payroll. And then we're looking at unemployment rate, hourly wages. It gets pretty busy. So a lot of econ data, as far as I can see, could be a little wild this week. But we'll look at the charts, kind of get an idea of what we're expecting. So let's go ahead and move forward. So last week we had these are your neutral results. And as you can see, you got the trigger long. We hit all the targets, I believe, 1, 2, 3 to the upside. And then we had this extra number 4 that we could have hit. We did not. But we did create this inside and down formation right there, or this supply zone. And you could see that we had a big sell off after that. And then we came into some demand over here. And then we started to push to the upside. We'll get further into this here in a few seconds, okay? But overall, if you were using the neutral strategy, it actually worked out really well this week. Over here on the QQQ, same thing, gave you a buy trigger to go long over 360. We hit 1, 2, and 3 targets to the upside. Same thing, big pivot on the top here, creating that inside and down formation. A lot of supply was built here. You can see the force of the move down was really strong. And you can see, again, we came into demand, and I'll show this on the NASDAQ futures and the ES futures what's happening. But we're bouncing from that demand, and really the big thing this week is whether or not we can get over that cloud or not. Starting here for this week, go ahead and pause this video, take these levels, put them on your chart when you're ready, and these will be the levels that we're using for this week, okay? All levels to the upside are resistance until proven otherwise. And again, we want to pinpoint this supply that's on the SPY and the QQQ. That could be a stopping point for this week. Again, my overall sentiment, though, is going to be choppy, and we're lower on the curve, which means we could see a bounce in the market. When I say low on the curve, basically your demand zones are right here. And let me make those green for you. So we have demand here and demand right around here. You can see we came back and tested these levels. We did start to push up from there, and your supply is here. So when you think about it from a curve perspective, you're lower on the curve, and we could continue to move to the upside before we hit that supply and then back down, okay? And a lot of things in play for this, you know, especially the dollar, the TNX, and again, we'll get to that here in a second. As far as this is concerned, your trigger long is above 442.20, and your trigger short is 438.21 on the SPY, and over here on the Qs, 366.25 is the trigger long. Your short trigger is 361.89, and these are the levels. Let's go ahead and move on. Our bigger picture, this is the SPY looking at a quarterly. Now, my notes here as far as this week is concerned is that at this point, it looks like an inside quarter, but please keep in mind that we still have 1 month and 3 days left before the close, okay? And it's starting to look sort of like a doji. It's, you know, everybody's kind of confused, and you'll see later on the Fear and Greed Index, we're basically right in the middle. We're neutral, all right? So people are scared. People are not too greedy right now. They just really don't know what to do with all the stuff that is out there in the market. All right, people are kind of scared, in my opinion. So it's kind of interesting that it's neutral this week. I feel like a lot of people still are looking for some big move to the downside. So a little bit more to go to the upside, but B and so forth. I'm measuring from this rally that we started here, and then I'm measuring to here, and then I'm finding those levels for the support, and I'm also looking at smaller time frames for structure around that, okay? Now, you can see that we came up and smacked the supply like we were supposed to. We came in, and that topping wick says that, you know, we're not really getting past that barrier, so bears are in control. Overall, though, I still find this overall rally very bullish. I this information, find out what's going on in the world, you know, and try not to lose too much money while we're chopping, right? And that's why I really want to just concentrate on a few names this week. Moving over to the QQQ update, again, same exact thing. You can see that the quarterly candle at the moment is inside, but we still have 1 month and 3 days left. Last week, we saw inside weeks. I didn't mention that on the SPY. So inside week, which is, you know, it's a good thing. After 3 weeks down, we went inside, and it's possible that we could see an inside and up. But again, the rallies are to be considered just a relief rally until proven otherwise. You guys know what that means. If you've learned from me, basically, we're just not looking for that big of a bounce, all right? So these bounces are, you know, an opportunity to short until we're proven wrong. And again, I'll show you that here in a few minutes on the ES futures and the NASDAQ, okay? Looking over here, your resistance for the week is 370, and your support is 358 by 346. Again, overall bullish, just running into a little bit of overhead supply, and I do expect it to be pretty choppy. Over here, the dollar, this is a big deal, folks. The dollar is moving up. It's gone from a red to up. That means people are getting greedy. That means that once again, you know, that they're getting on the long side. All right, so that's all that means. So just know that anytime one of my trendy edges are here, and whether we're looking at the skew, whether we're looking at Apple, whether we're looking at SPY, it doesn't matter. This is support until proven otherwise. This is telling me that we could be in for a relief bounce this week. But again, guys, I want you to be cautious. All I'm saying is have fun. Intraday trade until proven otherwise, okay? Now, if we start to break down here below this trendy edge, and again, I look at the skew from a weekly standpoint, not a daily standpoint. But if we start to break down below that, then obviously the market's still pulling back and things aren't looking so great for the bulls. Over here, this is your fear and greed. We're at 48. We actually ticked up about 2 or 3 points, which kind of surprised me because I didn't think that. I thought if anything last week would instill a little bit more fear than it would on the greed side. But yeah, we ticked up a little bit, and overall we're neutral. Okay. Over here, this is where, for me, this is where things really start to make a lot of sense from a supply and demand issue. Looking at the ES futures, you can see here that this is the same exact blueprint, and usually they don't change unless we have a really drastic move on the weekly. But so far, resistance is here until proven otherwise. That's 4444. And then, as far as support is concerned, 4328. We had somewhat of a decent move last week. We had 3 weeks down, and then we finally got our first inside week. But even on the push up earlier in the week, we were met by a lot of overhead supply, and therefore we created a topping wick, letting bears know, or letting us know, that bears are in control up here. So again, just a slight warning there. Over here on the daily, we have new triggers, we have new resistance, new short trigger. I want to talk this out with you and kind of show you a few things that I'm looking at. This overall is what we call an H pattern. I like to call it the hope pattern because most bulls, and most people are bulls, are in this hopium phase that, hey, I hope we break above here. I hope things start looking like they did 3 weeks ago. But the lowercase h pattern is just so significant, right? Because what happens is you get this relief bounce right here, boom. It goes up about 23 to maybe 38% of this move here, and then it's met with overhead supply on smaller time frames, and therefore you create what is a lowercase h. On the daily, we have to get above the cloud, all right? And we have to create a base above there. And that's the thing I don't want you to forget. Like, yes, it felt bullish when we pushed above there. It felt really good. I was like, yeah, man, we're back, baby. And then guess what? We didn't create the base. What does that base look like? I want to show you really quick. Let's say that this is the cloud. All right. And let's say that these candles are a day. So meaning one day. We break above. We get excited. Okay. What does a base look like in my definition? We want to come back and retest what was resistance. Okay, that would be the second day. Let's just call that Monday, Tuesday. And then Wednesday, what I would like to see is a, it looks like this. Sorry. And then we come back to test that cloud. Okay. And then on that Wednesday, what happens is that we kind of flush a little bit on that low, but then come back up and we make higher highs. And then we create that inside and up, or that base above the cloud, then things start looking better. But you notice we haven't done that. Okay, we have not done that. We just came up, got us excited, and then pulled right back. As a matter of fact, on this daily, we're underneath the cloud. That cloud is resistance until proven otherwise. When I zoom in here, you can see how amazing the cloud works until it doesn't. All right, so even if we get above, again, need to say, I would say at least 3 candles and higher highs in order for me to feel better. It doesn't mean I won't already be long. It just means that I'm not really pressing on that gas like I want to until I see something like that form. Now, in saying that, I love buying on the dip because that's what supply and demand traders do. We're identifying demand to the downside, and then we're taking trades off of that. Okay, and then we're looking to trim those trades into resistance. Okay. Your trigger longs, they're based on the trendy edges this week. You can see there's a yellow one there and a purple one. And if for some reason that breaks down, then I would like to see if this gap gets filled, and then perhaps from there we could try to go long from there. Okay. Now, again, just daily perspective, looking at the TTM squeeze histogram, we have 1 yellow bar. I would like to see 2 yellow bars again before I feel too convicted to the upside. All right, and most likely what would have to happen is we get back above there, okay, just like that. All right, so moving on, this is the 4-hour. This is where I feel like you can really see what's happening. Last week, to jog your memory, we had a possible inside and up. And I had identified this and we were exactly right. It worked really well to the upside. And then we came back and tested the same inside and up formation. And then we came back and we tested it again. What this is telling me from a demand perspective is that we have interested buyers here. See, this would be like no different than if I owned a retail chain and every time I try to sell my product, it would get bought at, say, 99 cents. People are willing to come back here and buy at this level. All right. And so for right now, this is the clearance rack. Every time it comes back here, this is a buy. All right. Until, again, we start to break down below here. So from a 4-hour perspective. Now, the reason why we stalled when we look at this and we come up here, again, we have a little bit of selling pressure here. Throw some Fibonacci's on there. We came up into that bear channel that I teach you guys about. We created a big pivot. So from a 4-hour perspective, we have this beautiful supply zone. We have one here as well. But right here, all right, this is what I'm telling you. Again, lower on the curve, we're closer to the demand zone. We have a supply zone here. If for some reason, I got to give you different scenarios. Let's say that we gap up, things are looking amazing. You're super pumped. Overnight futures just keeps on carrying us up to the upside. No matter if that happens tonight, tomorrow, Tuesday, whatever. If you're opening up around this red box, around 44.69 by 87, take caution. Okay, they're just opening you up and pushing you into supply before the open. And that's how this market works. This is how the market's always worked. All right. Now, if for some reason we gap down and we get closer down in this green box, I'll be looking to buy. But again, I'll be looking at my signals to make sure I get that right entry. Okay. Moving over here, this is your NASDAQ. And if you think about it, the week previous, to jog your mind one more time, we needed to get above the 23.6, and the NASDAQ has been leading the ES, right? Right? The QQQ, TAC over SPY, right? We all know that. However, this is really bullish. These guys reclaim the 23.6, which in my definition, far as this range is concerned, this is super bullish. All right? These guys aren't giving up. However, again, 3 weeks down, met by an inside week and a huge topping wick says, yeah, well, we gave you an opportunity early in the week, but we still are defending this line. So bulls this week, you need to hold the 23.6 and you need to get over this trendy edge. And if you guys have these on your charts, which most of you do, you'd be looking at that purple line right there, and that's the area we want to see price get above. Okay, we'll break that down a little bit closer here. So on the daily, let's go over it. I'm giving you guys a lot of insight on what I'm looking at on these charts. It's important. So same thing. This is what we call an H pattern. We come up, fake out, right back down. The hopium continues, right? We hope it doesn't go back down, but a lot of times it does. All right. What do we need to do? We need a second yellow bar here on the histogram. We need to get above the cloud, all right? And we need to stay above there about 3 days or so, all right? But during that time, I need you to take note of the resistance and the short triggers. My short trigger is around the top of the yellow trendy edge. My resistance is in the middle of the cloud. I would expect a little bit of resistance in there, all right? And my buy trigger, our buy trigger from last week, guys, worked really well. It went straight up, almost 3 days in a row, 4 days in a row. And then my lower trigger, if for some reason we gap down and this does not work, I feel like the better opportunity to go long, and a little bit more fear in the market would be right around this zone. And that's around 14,532, which would be a nice, healthy pullback in the market. Okay. Again, I think it's all about the cloud. It's all about the cloud, all the econ data. It's going to be a catalyst to push that price, whether it gets above there or not. We're going to find out. And it's hard to argue, how special an EMA cloud can be. You just got to understand the process around it. You're bullish above it. You buy it when it's above it. When it's below it, you respect it and you understand that you can get a bounce, but also that you could meet with a lot of resistance. All right. So again, we could see that right there. moving on over into the 4 hour, same story. We had an inside and up formation. We came back and tested that demand. We pushed up into resistance on Friday. We stalled there. Again, need to get over the 4 hour cloud. You have a beautiful inside and down or supply zone above here. And if for some reason we get to here, again, caution. If for some reason we gap down into the green, I would be looking for a buy. But again, I'm looking at a couple things that we don't cover on the broad market analysis. When we get to these zones, there's specific indicator or buy signals that I'm looking for to get into these trades. Okay. Also, obviously, the PMZ, one of our most popular indicators. Absolutely love that. That's my go-to for the day. But this is the bigger picture for you. Now, in saying all of that, my overall sentiment, again, guys, just have fun, right? Wait for the levels. Stay disciplined. Take everything that I give you from the Friday video. Take from it. Don't forget to journal. All right. Don't forget to journal. Like, this is where we're going to learn a lot about ourselves. Like, are you being patient? Are you only executing at levels? Are you waiting for the signals? Are you double checking, looking at this histogram to see, are buyers coming in on a smaller time frame or are sellers still there? A lot of these things are really going to help you out. Now, my concentration this week, what I really want to concentrate on is the SPX. I'm having fun with it, I really do. And a lot of times when I get finished with the SPX, then, I think to myself, I said this on Friday in my video. I'm like, why don't we just come in here and trade the premium chart every single day? Like, why wouldn't we? I feel like it's really, really straightforward to understand. So listen right now. All right. For me, this is going to be really important going forward for this week. Let's do this Monday through Friday. Nothing's going to change. I'm always going to trade the ES and the NASDAQ futures. I'll be sharing those those signals and the levels and all that fun stuff like we do every single morning. But on SPX, this is what I need you to do. And I've taught you how to do this. So again, go back and watch the video if you don't know how. What we're doing is we're sticking the SPX option on a premium chart. So if you look right here, for example, this would be tomorrow's 4435 call. All right. And this is a premium chart of it. So we're still using the trendy indicators. All right. Based off of these levels. And it's really straightforward. This in the middle is going to be the price of that option. Okay. These are the buyers. These are the sellers. I buy over here. I sell over here. All I do when we open up here, this is really special. I'm on a 3-minute. I'm using the PMZ. All right. And you guys understand how I trade that PMZ. So my option's already loaded. Okay. And I have calls or puts that I can quickly place in here. And what I'm going to be doing is when the when these trigger, we'll be going long. So I want to show you an example. And I was doing this on Friday. Thursday. We've done this plenty of times. But what I'm doing is I'm looking to take the call long over the PMZ, and then I'd be trimming into my trendy edges. Okay. And they give you the price. So you already know what you're going to be paying for that option instead of like trying to hurry up and, you're tripping over each other trying to understand how to do this stuff. We're already there. So if I were to take a long call here at 647, I'd be trimming at 815, and if I were to get here, I'd be trimming at 1184 and so forth. All right, and if we want to go short, then I would pull out the puts. All right, and then we'd go short underneath this level here. And if you're a badass and you got a big account and you just want to sell naked, same thing, right? I could sell the calls. Right, if we break down below here and you can watch the premium erode. So, for example, 465 is what that call would have cost. But if we shorted that call, it would have went down to $2, making about 50% there. All right, so really, really cool. This is what I'm going to be looking at. If you don't know how to do this, make sure you go through my videos. It's really, really straightforward. All you got to do is create a watch list. And for example, mine is right here. It's called watch and current trades that I'm wanting to take. So I move the options over into here. I make sure my red is linked with the chart. I put the premium over here and then I trade it from the active trader. Boom, you're done. All right. And you're ready every single morning. Again, guys, you can do this on any name in the market, Apple, Baba, it doesn't matter. All right. And then we'll just trade our levels from the premium chart. Okay. So if you guys have any questions, reach out to me. Overall, if you are on board and you want to know more about this, just hit me up and we'll talk about it, especially if anyone's watching that's not a member. And don't forget, guys, you can always come in and check us out at Simpler Trading for a trial. You can hang out with us for several days and kind of see how we do business here at Simpler Trading. I really appreciate you folks. Have a great day.